Hey everyone, Couch Investor back on our video for today. So let's talk about the stock that Warren Buffett owns in his portfolio that analysts see soar close to 60%. You might say, Warren Buffett owns a growth stock in its portfolio? That sounds weird. Well, yes, Warren Buffett actually holds Amazon. It might be a tiny part of his portfolio, as you can see here, 0.38%, which means over 10.6 million shares. Now, Amazon, the stock, as you can see right here, it's down 40% since its all-time highs. Right now, the stock price sits at $113. Yes, it has gone lower a couple of months before, close to $100. What does this blue line represent, you might ask? Well, I put it here because, as you can see, in February 2020, this is basically a top back then. So you might see it fall until that blue line. It's also the area where it recovered the last time. And also just to show you that the price of the stock basically right now hasn't really moved in over 2 years. But of course, during the pandemic, during those 2 years, the stock has moved. It has gone up, it has gone down, up and now down again. It has been a roller coaster ride. For the business itself, the same thing there. During the pandemic, it has been making lots and lots of money because more people were buying on Amazon because they had to stay at home, which means Amazon invested more and more in logistics and warehouses, which obviously now turns out to be not very useful. Lots of warehouses are empty. They just, over-invested. But that does not mean that Amazon isn't one of the best investments to make in the coming years. Amazon, by the way, is the #1 company to work for in 2022, according to LinkedIn. And I believe it was also the #1 spot in 2021. Now, I've talked about Amazon a lot on this channel. Well, it's the third biggest holding in my portfolio as of today. So obviously, I'm extremely bullish on the company. I've talked about a lot of stuff, advertising, third-party sellers, AWS. In this video, I'm going to add 2 extra things as well. But before I do so, if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment, some of which might actually save you some money. So as we approach the next earnings report, let's have a quick revisit of the last one. Obviously, online stores, we all know what happened there. It's down 4% or basically flat, excluding FX. Third-party sellers, this is the part where I would like to see it continue growing and growing. You can see here 9% growth or 13% excluding FX. I don't mind online stores being down as long as third-party services go up. Why? Well, because higher margins here, this is low margin. Then with regards to subscription services, that's up 10% or 14% excluding FX year over year. Now with regards to Amazon Prime, did you know that they have over 200 million members around the globe? And they aren't slowing down anytime soon. As you can see, Amazon says Prime sign-up topped Cyber Monday during NFL game. And they said that the NFL Thursday was its most watched nightly show ever. And why is this such a big deal? Well, they add more news here. Amazon has scheduled another big sales event on October 11th and October 12th called Prime Early Access. Now, I'm sure some of you might think this is probably not a good sign. This means, well, they have lots of inventory, so they want to get rid of it. Well, why is it such a bad thing? Get rid of it right now in October, knowing full well that a month later there is Black Friday, Cyber Monday, holiday season, winter, etc. Why not do it, right? Sellers will probably spend some advertising dollars here and there, logistics, buy with Prime, just more money flowing into the business, inventory gets reduced, people get things on a good deal, which is deflationary, by the way, and that's just one part. The second part of the importance of Amazon Prime is the fact that, well, Prime members spend much more than non-Prime members. On average, Prime members spend $1,400 a year versus $600 non-Prime members. So you see the big difference here? So it doesn't really make much sense not to have more of those big Prime days. Now going back for the last 2 things here, so advertising services that grew 18% year over year or 21 on FX neutral basis. to $8.75 billion. And I keep repeating this, it's bigger than YouTube and it's bigger than Netflix as well. Even though compare Netflix without advertising right now doesn't really make that much sense. But hey, just to put it into context, it's a huge part of the business and it grows quite fast. And then obviously the creme de la creme is AWS, over 30% operating margins, 33% growth year over year, tremendous business. And of course, we've talked about the Buy with Prime announcement that they announced earlier this year. Why is it a good thing? Why was it such a big deal? Because, well, like I said, they overinvested in logistics and warehouses. So why not give sellers outside of Amazon.com access to their services? It just makes so much sense. Now, of course, some of you might say, oh, but you don't remember FedEx, the guidance that they give, doom and gloom. While, yes, I agree, some of it might affect Amazon negatively. On the other side, Amazon is bigger than FedEx when it comes to shipping. I think they surpassed them last year. Plus, I think the fact that Amazon did surpass FedEx is why FedEx is hurting. I don't think Amazon will be hurt as much as them. But then again, I might be wrong. We'll have to wait a couple of weeks until the earnings report, which obviously I will cover on this channel. And last thing I want to cover in this video is obviously Zoox, the autonomous arm of Amazon that a lot of people have forgotten that they own. Autonomy, full self-driving is obviously something that will happen in the future. And for a company like Amazon, having cars or whatever drive themselves, delivering packages or delivering people to some places at a very, very low cost of operation, I think could be very, very big for the company. And we did have some news with regards to that. So the chief executive officer of Zoox, Amazon's self-driving unit, expects autonomous vehicles to be present in cities sooner than people expect, but stopped short of saying when her company's product would appear on roads. She continued by saying that we don't get into dates at Zoox. We prefer to show and tell. She added that testing has already started. The bigger challenge, she said, will be expanding autonomous infrastructure beyond initial cities and maintaining a user experience that's consistent. Our focus is being on public roads with our robotaxi soon, but it will be to a small to moderate scale. The question is our ability to add cities on a continual basis that's good for customers. And I repeat the same thing I said with regards to Tesla's FSD. I think it will take some time until we see this happening on a grand scale. They might start with small cities or maybe small counties to see how that works. Of course, in the future, as more and more autonomous vehicles drive in public, it will be much easier because having right now, let's say 99% humans drive and just 1% a robot, it's just a recipe for disaster. But if you have 90% robot driving, 10% human, well, the chance of something going wrong is much, much smaller. But I can talk on and on about this topic. Maybe it's going to be a topic for another video. But overall, that's all I wanted to cover with regards to Amazon in this video. Third largest position in my portfolio right now. I think this company, the stock hasn't done anything in 2 years, but I think the company will be doing a lot in the coming years. Obviously, do share your thoughts down in the comments below. Do you own Amazon or any other big tech company in your portfolio? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.